CLT Life presents Joe Garner, Certainty Home Loans, hosted by Jimmy Grappone, sponsored by the CLT Life Home Team at Costello Real Estate and Investments. What's up, everybody? This is Jimmy Grappone here with the CLT Life Home Team at Costello Real Estate and Investments, and today we're talking to a loan officer, Joe Garner. He's the branch manager and loan officer at Certainty Home Loans. What's up, Joe? How's it going?
Hey, how you doing, Jimmy?
I'm doing good. So I'll tell you just a little bit briefly about how Joe and I met. So we both love to play golf. He's a little bit better than I am. And I was playing a tournament with another agent, and we got hooked up with this closing attorney, and we were supposed to play with them. Last minute, the closing attorney wasn't able to make it. And Joe ended up getting called to sub in, and he ended up being our A player, which saved us because the attorney, I played Top Golf with him a few times. So before diving into mortgage talk, let's talk about you, get to know you a little bit.
Sure.
You've been in the business almost 17 years now, which is hard to believe. I know.
So, it's hard to believe. It's hard to believe for sure.
So
2004 was an interesting time in the mortgage business. We've seen a lot since then.
Yeah. So you kind of were riding the wave up, the kind of unregulated Wild West of the mortgage industry, and then you saw things kind of come to a screeching halt, and then lots of new regulations came in, and it really changed the way you guys operate. So how'd you get into mortgages, and talk about some of those changes you've seen over the years?
So I graduated actually from North Carolina State with a degree in psychology. So it's far from anything mortgage related that you can think of. I took plenty of finance classes, and ended up just having the opportunity to get into the business through a friend. I was working at Quail Hollow Country Club as an assistant golf pro. So came out of school, not exactly sure what I wanted to do. My kind of dream job was to be a sports psychologist on the PGA Tour, right? And I think there's like 3 of them. So I kind of quickly realized that may not be working. So decided to switch career paths, got into golf for a little bit, and met some good people. Ended up getting a job kind of entry level in the mortgage business. I started out as about as low as you can get in the mortgage business, and worked my way up. It took me about a full year before I was actually in sales. I worked like I said, there was a pre-qual is what they used to call the term that we did, which was you would take in the figures from a salesperson out on the field, and you would calculate what the rate was for that client, and you would fax it back to them. And so it was back in the dark ages of mortgages. So I would basically take the numbers, run the scenarios through, send some information back to the field so they could be live with their customers and figure out what rate was going to be available. So I did that, and then I was an assistant for a little bit, and then kind of moved into the sales role after that.
We had cell phones back then, but we didn't have smartphones back then.
We had Blackberries. They were lovely Blackberries. The roll ball Blackberries.
Yeah. Y'all were high tech. So I was looking at your profile online on your website, and obviously I know you well, and we've done several deals together. But one of the things you talk about is being able to find a solution to just about every financial scenario that you encounter, being one of the things that separates you from other mortgage professionals. And we were just talking, before we recorded, about a couple of loans that we worked together. It was my buyer clients, and they both hit kind of sticky patches right before the finalization of their loan. They started out with different lenders, and you were able to come in and save those. So one was a guy who had, I think he got laid off from his job and got another job in the same industry, and the employer messed up and paid his first pay stub as a 1099 instead of a W-2 as he was supposed to be. And the other lender just was not flexible at all, even though it was an HR mistake by his employer. They basically denied the loan. You stepped in. I think we ended up closing only like maybe 10 days after the original close date, which was awesome.
Yeah, it's tough. I mean, you've got to be able to think like an underwriter first and foremost, to understand what they're going to see and what what is going to make them cringe, right? And then find a solution and try to get that as quickly presented to them in a way that makes sense. So, the client didn't do anything wrong. They were hired as a W-2 employee. The HR department, it was a big company. They just made a mistake. They ended up, putting him in as a contractor at first. However, we went and reviewed his offer letter. His offer letter clearly stated that he was going to be a W-2 employee. So making that change on the fly, we actually, as a company, reached out to their HR department. They did confirm that he was supposed to be, taxes were supposed to be removed. Mm-hmm. And we ended up being able to close, I believe, the day after he received his next paycheck. So it was about 10 days. We were able to use the same appraisal from that lender and quickly, I think Shof actually quickly turned the title around for us. But it's being the experience of being around for a long time and seeing a lot of different scenarios. I worked as a manager in the business for almost 10 years and had upwards of 20 to 25 loan officers working underneath me. And so constantly seeing their challenges and seeing the loans that came onto their desks and then finding the solutions with that. You got to be able to do a lot of things in the mortgage business. Somebody's not going to always be credit ready. So you've got to be able to work with that client and be able to show them ways that, hey, you can't qualify right this second, but in 3 months, if you follow these steps, we'll be able to get you to a point where you can qualify and you can stop renting and start buying that house. Mm-hmm. You've got people, like you mentioned, like changing jobs. There's going to be time periods where it's just not ready for them right then. But if you are patient and you work with the client and you take good care of them, not only will you get the job done at some point in time and help them achieve that home ownership, but you'll get clients out of that for life, which is kind of what I base my business on with referrals.
Yeah. Well, I love how you mentioned having the mindset of an underwriter, knowing what that underwriter is going to be looking for, so you can kind of get ahead of the problem or the issue. So you're not putting it on the underwriter quite as much. Yeah, you mentioned sometimes that the clients that come to you, they're presented to you, whether they come to you directly or whether it's one of your realtor partners brings them to you, they're not always credit ready. So
right,
how do you, when you have those conversations, how do you handle those conversations, and what kind of advice do you usually give people?
Yeah, so sometimes it's not the easiest conversation to have, right? You'll have a client that just doesn't know, right? They kind of think that their score is fairly good. They know that they had some late payments maybe in the past, but don't really know that it's too tough or that it's in that bad of a spot, but sometimes it is, right? And so going through the report with them line by line, saying, hey, do you remember this? Do you recall what was going on at this time? Is this valid? Is it correct? If it is, there may be a step where we can take where we get them into a company that can help with that, right? There's credit repair companies out there. There may be something where they're just on the verge of qualifying and they've got a credit card that's a little bit high as far as balance versus high credit limit. And so that really does have an effect on your score. So we run scenarios through our credit expert program and say, if we pay this down by $100, $200, $300, whatever it may be, what do we get as far as a boost from the credit? At that point in time, that's a quick problem that we can fix. Hey, Mr. Client, you're not ready this month, but if you can pay this bill down and keep the balance the same, we'll rescore your credit, get your score where it needs to be, and then you'll be, ready to go in the next month. So those are the quick scenarios that happen. But it's treating everybody just like a human, right? I mean, people make mistakes. People don't want to have bad credit, but unfortunately, some things happen in their life, whether they had gone through a divorce or job loss or medical or whatever it may be. And so treating them like a human. If there's a solution, in a way to get them into what they're coming to you for, right, which is home ownership, then it's my job to find that solution.
And sometimes, I was just saying, sometimes it's not always the biggest, like paying off the biggest debt that people think they got to throw a ton of money at one thing. And they might do that and either won't have as much of an impact as they can by taking care of a few small things, or they might pay off and cancel a card that they have long time established credit with, and then that ends up hurting them. little
Right.
bit more. So it's good to have someone, more a financial professional, mortgage professional that can talk to them and guide them through the process so they know the right things to do so they can get qualified for a home.
Yeah.
So talking about getting qualified, pre-approval is a buzzword that, that's in the real estate industry and the mortgage industry. There's differences between pre-qualification and pre-approval. We don't have to go into all that, but right now in this, it's a really competitive seller's market, meaning there's not a lot of inventory out there compared to the number of people who are in the market to purchase a home right now. So lots of times, especially at the lower price points, you end up having bidding wars and lots of people, competing for the same home. And if you don't have a pre-approval letter, if you're not pre-approved and you can't back that up, you really don't have a chance, with getting it. So I guess, talk about that. What's your pre-approval process like? I know you have an app that people use. Talk about that a little bit.
Absolutely. Our system's fairly easy. I'll talk about that in a second, but you're right. Hit the nail on the head with how competitive the market is. Just yesterday, I guess it was Tuesday, we found out that one of my clients unfortunately didn't get a house. There were 42 offers on the property. The price point was $225,000. That's a big investor area. So you got a lot of investors that'll go in and offer cash for those properties. So it's really difficult to qualify, very difficult to stand out, I guess, in that field when you've got so many different people putting, offers like cash. So it is absolutely, without a doubt, you must in this market, and you can talk about this a little bit, but you've got to have a pre-approval. Right? There's no way about it. You're not going to walk in these days in this market and just put an offer down and they expect a pre-approval immediately. So our process is really, really easy. We've got a digital system. So it's an app that you can download onto your phone. You can also just use a regular PC and register for our online portal. The portal will take you directly into the application page. There's literally about probably 15 questions that you answer. Takes about 10 minutes to complete it. And our system is digital, like I mentioned, so it'll try to pull your income in automatically using the work number, which, really just lowers the amount of paperwork that you end up having to bring in the table, right? If I have a client that uses my app that their company uses the work number, they bank with any major bank because the assets do pull through automatically as well now, fully secure. I can have a pre-approval to somebody in a matter of minutes, literally 10 minutes. I did one at my son's baseball game last season. Everything checked out really quickly. I can look at it on my phone. Credits run, credit looks good. Income is there and pulled through automatically. I've got assets verified. I can send a pre-approval in 5 minutes. It's very quick and easy. So that part of the game and the technology that we've seen over the last few years has been amazing. And it really helps me to always be there for my clients, right? And for you, you're one of my clients, right? My real estate partners, they expect me to be there, and whether it be 8, 9, 10 o'clock at night or a Saturday morning or a Sunday afternoon. I need to be available. So the digital platform helps me do that.
Yeah, I certainly reached out to you, in whether it's in the evening or on the weekends. 9, 10 o'clock, I'm usually trying not to do too much myself, but you also talked about, we talked a little bit about starting the pre-approval process early, not waiting until right before it's time to buy a house or go look at houses for the first time. So and I think part of that was in case people aren't always, ready to purchase right away. Does that kind of explain why they need to start early?
It is. And a lot of the time right now, Jimmy, not rates, but I guess rental prices are increasing all the time, right? And because of that, a lot of the landlords or management companies will want you to give at least 30, if not 60 days notice. If you're butting up against that time when you're going to have to move out, you don't want to be faced with a situation, especially like we said in this market, where there's not a lot of inventory. You may have to make several offers on a property before you ever get the house that you want. So you don't want to butt up against that time where you have to move out and unfortunately have to go month to month or have to sign another 6-month or 12-month lease where you're pigeonholing yourself into maybe $100 to $400 payment difference just by not being out of the lease at the time that you said that you would.
Right.
So that can be very costly. So I recommend, honestly, at least 3 months prior to the time that you feel like you're going to be wanting to be in a house, but as much as 6 months to a year. I mean, if you've just moved to the area and you want to, stay in the area, rent for a year, figure out what type of or what area of Charlotte or around surrounding area that you want to be in, so be it. That's awesome. I fully back that. Go ahead and look at the pre-approval process at that point in time. If we find something on your credit, we'll know right away. So by the time that year is up, we'll have everything squared away that we need to with that. If there were any hiccups with your job, we would know that up front. We would have plenty of time to work it out. So I don't think you can ever get pre-approved too early. Our pre-approvals are good for 4 months. It is a credit pull that lasts for 120 days. The only thing we have to do to update our pre-approval is to rerun the credit again and update income and assets. So as long as, it's a painless process. It doesn't take any time to do that. But it is good for, 120 days. But again, I say it's never too early to look at pre-approval. I've seen
rate. As I say, you hear about rate locks.
I've seen someone with an 800 credit score, right? That came to me last month who, Mr. Barr, what's your credit score like? Everything looked good. Absolutely never had any blips. We get the report back. He's got a 701 credit score. Not bad by any means, but there was a medical collection. He had no idea that it was on there. Within, I think, 7 days, we had reached out to the medical company, shown proof that the insurance had paid that payment, and we had it deleted from his report back up to an 800 score, right? So, and if you do that last minute and you're gonna, hey, I don't need a pre-approval until the day I put an offer down, unfortunately, we may not have time to fix it.
So you're talking about, you said your pre-approvals are good for 4 months. So if someone gets a certain rate, does that mean that rate is good for 4 months? You get a rate lock, or how does that work?
Unfortunately, the rate locks follow a purchase contract. So you have to have an address to actually lock a loan. So once the house is found, we can lock the loan in. Even on a new construction, if you've got a property address and you've put money down and you're under contract, I can lock that loan in for 6 months. So, the timeline on that, it can be expanded, but unfortunately you have to have a property address before you can actually tie an interest rate to it.
Gotcha. So you're also telling me, there's a recent increase in the max allowable conventional loan amount. So can you tell us more about that? And then what does that do from a lending perspective? People being able to qualify for a conventional loan versus having to get a jumbo product in the higher price points.
Sure. So a couple things, and actually FHA just increased as well. They seem to be, as property values increase, these start to, to go with it. I remember not too far back, maybe 3 years ago, our conforming limits were at $417,000, and they were that way for many, many years. They increased, I think, 3 times in the last 3 years, and we're now sitting at $548,250.
Wow.
For the conforming limit, right? So it's boosted up a good bit. And I believe in Mecklenburg and Union County, we're at $335,000 for FHA. So that's up about 30,000 from where it was last year.
That's the loan amount.
The thing about
purchase price, that's the actual loan amount.
That's the loan amount. Mm-hmm. Yeah. So obviously, a client that may be buying a $650,000 house, putting $100,000 down would still be in the conforming limit. Now, the good news is somebody that's putting in, 5% down on a $600,000 house or $580,000 house could still go conventional. They don't have to put 20% down on that property. There's mortgage insurance allowed all the way up to that limit of $548,250. So it gives you some flexibility for some home buyers that, maybe newer to the workforce, making good money, but don't have quite a lot of assets saved up for the down payment. They have no problem making the payment. However, they just don't have $50,000 or $100,000 to put down, to hit that 20% number. So it gives you some flexibility with a little less down payment, to be able to get into that market and still afford, the house of your dreams, even though you just don't have a ton saved yet.
Mm-hmm. Now, with FHA, are there income limits with being able to qualify for FHA, or can anybody get an FHA loan?
Anybody can get an FHA loan. Yeah, when the only income limits you really see, USDA, so rural housing, has an income threshold. And then if you're looking at any down payment assistance programs, there's income thresholds with that. But generally, the income is based around kind of a first-time home buyer program.
Gotcha.
But VA loans, there's no limit to income, and also FHA, no limit to income.
Yeah, I had a listing last. Mortgages can certainly, if you don't have your ducks in a row, if you aren't looking ahead, they can certainly trip things up if you don't have, if you're not working with a lender or somebody who's staying ahead of things, who's doing the due diligence and finding out as much information.
Right. Yeah, and that starts with a good application, right? And having all the conversations I've had with clients in the past, I mean, that helps, right? So asking the right questions to dig out, some possible scenarios where something could go bad, right? And if it's something that's iffy, let's go ahead. My company is nimble. We're small. I say we're small. We did $1 billion in originations last year, which is a record year for us. But we are not too big where I can't go talk to the head of underwriting and ask a simple question. I've got a scenario box where I can reach out to a group of underwriters and ask scenario questions and get that stuff looked at up front instead of sitting there a week before closing and finding out where we got a jam here.
Right.
And documenting all that, making sure that the underwriter that's going to review the file knows up front that it's been reviewed. So it's nice to have that kind of small family feel of a organization that we're with.
Mm-hmm. All right, and one last question, and
Sure.
This is everybody's watching HGTV and all these shows. You see all these renovation projects all the time, and think, oh, I could do that, or you could hire somebody to do it. You guys have some pretty cool renovation products, and not too many people know about. Is it 503C? Am I getting that? Get my numbers in.
No, 203K. 203K is an FHA product.
I had the 03 part right. 203K. Tell us about tell us about that.
Absolutely. So there's a few of them, honestly. We're one of the few lenders. We were actually one of the first lenders to do a VA renovation loan. We actually sat. Our head of renovation was on the floor of the Senate talking to the VA administration. It's a neat program that we kind of originated, which is cool. But there are different products, right? So you mentioned 203K, that's an FHA rehab loan. Mm-hmm. So it allows you to use an FHA loan and get monies above and beyond what the purchase price of the property is to help out with repairs needed on the property to kind of get it up to code and get it where it is. The one that I use the most is our conventional product, which is it's an awesome program, whether you're renovating a house that you're already in or buying a new house. Because I have a lot of agents that come to me and say, I've been trying to get this client in a house for 6 months and we're either losing out on contract bids or they just can't find anything that they like. They have this area that they're interested in, but nothing's popping up that makes sense to them. So let's take an example of a neighborhood that someone loves, but they don't think that they can afford the one that's already updated. Okay. So the neighborhood's up and coming. An example in Charlotte would be like a Wilmore, right? Kind of on the west side of town, but it's really, really gaining a lot of activity. A lot of people are renovating those properties and they're going for a lot of money. So a client would go in with a $250,000 purchase price, okay? And they have an idea hey, I love the area. This house needs a ton of work. They probably wouldn't even look at it, Jimmy, right? Jimmy, I I'm not a fixer-upper person. I don't want to do that, you know, blah, 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 blah. So you come to them with this product, and they can work with a contractor to get a bid prior to going under contract on the property. And let's say that the bid has the kitchen blown out, right? There's a wall that's separating the kitchen from the living room. They blow that out. They're able to extend the deck back. They're able to add a new HVAC. They're able to put a new roof on. They're able to make the master bedroom and bathroom exactly how they want it. Let's say that's a $50,000 renovation. Okay. So now we've got 50,000 or 250,000 for the cost of the house. Mm-hmm. We've got $50,000 worth of renovation work. And we go back and we take that contractor bid, and we also take the contract, so the 250,000, and we take it to an appraiser, and we say, Mr. Appraiser, what is this house worth once all these renovations have been completed? And that house might be worth 325 or 350,000 at that time.
Right.
We will lend off of the after improved value of the house. So instead of lending the 250 and just having a normal loan, mm-hmm. we're going to now be basing it off of a $350,000 appraised value. So the client can come in with their down payment off of that. It just gives them the ability to finance their renovation and get the house that they want, mm-hmm. instead of settling on something that they don't want, or getting the house that they want in an area they didn't want to be in.
Are you able to do that on higher price homes as well?
We can go all the way up to 548, 250 on the low amount. Okay. We don't have a jumbo renovation product. And then VA as well. VA will go up to the 548 as well.
Okay. But if let's say you have a $600,000 house and they're able to put mm-hmm. down $100,000, mm-hmm. You can still kind of close that gap.
You would be able to give them another 48,250. Okay. So if they had only 100,
something like that.
Right. Mm-hmm. Yeah, you'd be able to kind of give them that extra little bit in amount to finance, to make sure that they were able to, you know, to get the house the way that they wanted to when they moved into it.
Cool. Awesome. Yeah. Well, Joe, I'm not gonna keep you too much longer. I know you gotta get back to work, and I do as well. I really appreciate your taking the time.
Absolutely.
Talk to us here today. Anything that you want to add? Any plugs or anything for your business? How can people find you?
Yeah, absolutely. So I have been in the Charlotte area, South Charlotte specifically, around the Providence Road, kind of where Waverly is, for 41 years. So I know the area well. I've got a lot of great, you know, agents like Jimmy that trust and know that I'll do the work that I say that I will. My office is at Sykes Place, which is Mickey and Ballantyne Commons. So very accessible, you know, to the Weddington, Waxhaw, South Charlotte area, and would love to help anybody out that needs my help, whether it be a refinance and with the rates as low as they are, or, you know, setting up a plan for home ownership. I would definitely love to help with that. 2 plugs, kind of the coolest part about my company, I would say, and some of the products that aren't really mortgage products that I love the most is, one is our corporate connection program. And our corporate connection program sets up with local businesses all around the country for the different branches that we're in. No cost or obligation to the company to sign up. All it does is allow us to advertise our products to their employees. In return, we get $500 off the closing cost. Some of the companies that we are working with right now, all Novant Health employees, all Atrium Health employees, Charlotte Mecklenburg Police Department, Charlotte Fire, Union County Sheriff's Department. We have got Charlotte Mecklenburg Schools. We have all different types of programs. Union County Schools, York County Schools. So tons of different companies that can benefit just by, you know, using our services. Mm-hmm. Our services are given to anybody for free. You don't pay a dime to talk to me, have a scenario run, for me to take an application, for me to help you on your credit. I don't get paid a dime to do that. My goal is to help you to get the loan closed, and at that point in time, I'm paid for my services. Mm-hmm. The other one that I really love is our community connection. And our community connection is something that's super awesome. Last year, I believe our company, which I think we have 380 loan officers, donated just south of $200,000 to local charities.
Wow.
The loan officer and the company together match a donation gift of $250 to the charity of the client's choice at closing. I was able to do $2,500 last year to the Steve Smith Family Organization. I was able to do $1,000 to Mobile Mammograms, Project Pink. So just some great organizations that can, benefit from, just working with a smaller local company.
Nice. Well, that's awesome. It's all about giving back. I believe that you can do well for yourself, but you can also do good for others. And when you're doing that, that's how you make the biggest impact. So
absolutely.
Awesome. Well, Joe, thank you so much again for your time. Thanks everybody thanks everybody for watching this. If you've stuck with us this long, appreciate your watching this interview. Thanks again. I'm Jimmy Grappone. I'm with the CLT Life Home Team at Costello Real Estate and Investments. So if you have any real estate needs, call me up. We'll hook you up with Joe. We'll make it happen. We'll help you get into the home of your dreams.
Absolutely. Love to help.
There we go. All right, man. Well, Joe, thank you so much. And we will talk to you soon.
Sounds good. Have a great afternoon.
All right. You too. Thanks for watching this episode of the CLT Life Presents, hosted by Jimmy Grappone, local realtor with the CLT Life Home Team at Costello Real Estate and Investments. We'll see you on our next video.